Good evening. This is Tom Alexander. It is Saturday, February 18th. It is about 7:05 p.m. Eastern Time in beautiful Charleston, South Carolina. And we had a rather choppy, churny week last week. I think we're getting closer and closer to a resolution. It has been frustrating if you trade stock indices in any time frame because there's so much, not only intraday chop and churn, but day-to-day chop and churn. And that's typical of balance areas. It's typical of what happens after considerable moves. Let's take a look at the charts and I'll show you exactly what I'm talking about. Okay, I mentioned in last week's video, I'll start with the Dow, that all four of the indices off of the October lows rallied to roughly the same level or the same percentage amount, roughly around 20%, give or take a percent or so. Now, the Dow is the one that reached that level earliest. And since then, really since late November, the December top, double top, end of November, beginning of December, this was that dramatic spike day. And we spent very little time above this level. But the net of it is that the Dow has traded increasing in an increasingly tight range. Last week, I noted that the net change in the Dow from November 10th to the 6th, was it? Oh, it was actually the February 10th was 0.49%. Well, look where we closed on Friday. We closed just below the same level that we closed at Friday week ago. So it's just, this is the most unbelievable, mind-numbing, narrow range chop fest in a stock index that you're going to find. Let me show you another view of this. Okay, here is the Dow. This is a profile unit. Each profile unit is 1 month of trade. Each letter is 1 day of trading. Now I have split out January because effectively, and this gets into market profile and how to use market profile. Market profile should be used to identify market condition. It's not a trading system. It's not, doesn't give buy sell signals, etc. Okay. And anytime you look at a profile chart, you have to understand it is a chronological definition of an auction. Now, there is some consistency when you are comparing chronological slices, and in this particular instance, each profile unit is 1 month of trade. But the fact is that the auction process is an ongoing, ever-flowing process. So you have to be careful about trying to put it in a chronological box all the time. You can't always do that, which brings me to, so this is the February profile unit. We have about a little less than a week and a half of trading left in the month of February. But the reality is this balance area started the last week of January. And this is as tight a structure as you're ever going to find. And this is where we closed on Friday. So, I've been thinking the Dow would be the key to the break, the next intermediate term break where the market's going to move 5% plus directionally. And I still think that. But this gives you a wonderful view of what's been going on in the Dow from a market profile charting perspective. Okay. So getting back to our other indices. So this is the Dow going nowhere. It's gone nowhere literally now since November, and an even tighter range since the end of January. Okay, so what about the others? Let's take a look at, let's look at the S&P, and then we'll look at the NDX. They're very similar. This is not that nice, neat, boxy balance area that we see in the Dow, but it is a very two-sided trade. It is effectively the same thing. You have overlapping day-to-day trade, wide range up, wide range down, gaps down, reversals up. It's all over the place. Nothing has been resolved. Now, what will be important as we head into the new week, and by the way, futures markets will be open Sunday night until 1 p.m. Eastern time on Monday, but there's no cash trade on Monday. So I don't trust anything that happens in the futures from Sunday night until the cash market opens on Tuesday morning. And what we're looking at here are cash charts. So what is important going into next week will be Friday's lows in all the indices, and then Thursday's highs in all the indices. Between those two levels, you know, a close above Thursday's highs by all four of the indices is bullish short term, at least short term. A close by all four below Friday's lows by all four is bearish, at least short term. And the NDX has a very similar pattern to that of the S&P. The SPX took out the February 10th low on Friday. The NDX did not, so that's a bit of a divergence. But again, I think that Friday's lows, if all four of the indices close below Friday's lows, I think it's at least short-term bearish. Okay, let's look at the Russell. The Russell is showing relative strength. The Russell did not come close last week to its February 10th low, and basically traded inside. It's built a balance area, short-term balance area here. So the break of this structure is going to be important. Okay, the technical situation. This is no help, bottom line. We have now gone 90 days with one negative 2,000 breadth reading. That is really a bull market signature, frankly. Breadth, of course, 10-day moving average has dribbled lower. That's sort of a function of a moving average. It is a moving average. Price has been choppy and churny with, you know, not a whole lot of upside momentum since the peak back here in the middle of January. We did trade higher. Now we've just been chopping and churning, doing a lot of nothing, and that's reflected in the 10-day and the 5-day moving averages of NYSE advancing issues. And breadth has also not been able to generate any upside momentum or downside momentum. So again, this is, it's one of these times it's not helpful. Okay, looking at 30-minute breadth, this hasn't been helpful, very helpful either. Again, everything is sort of consistent in here. There's no extreme. We're waiting on an extreme. An extreme is coming. I hope you guys have a great weekend. By the way, do me a huge favor. If you have not subscribed to the channel, please do so. Please leave comments, ask me questions. I will respond to all your comments, all your questions. It helps with the search engine stuff, okay? So it's very helpful for me if you make comments. If you subscribe to the channel, feel free to pass this along to all your trading buddies, post it in your chat rooms. You guys have a wonderful weekend, and if something changes, I'll post again.